Welcome, ladies and gentlemen, here on Commodity TV to a new edition of our interview series. And of course, uranium is hot. We are already approaching $50. And so we want to talk to one of the real, great guys and big guys in uranium, Scott Melby, the CEO of Uranium Royalty. Welcome and good morning to Canada, Scott. How are you?
Great, Johan. It's great to be with your viewers and your network. It's exciting times in the uranium space and a lot to talk about.
Yeah, definitely. Thanks for taking the time, and let's go directly into medias res. You are the former president of Cameco, so you are one of the, let's say, few guys which are long time into the uranium business. And we were talking in the last years a lot about uranium, how supply demand is in an really approaching an imbalance, and it looks like now the breakout is there, definitely. And to me, it's as you remember, we always said, like, if we wake up in the morning, uranium really appreciated $5 or more, this is the breakout. So this happened exactly this week, and so the breakout is there. So maybe first a comment from your side on this market. It reminds me to 2006 and 2007.
Yeah, I was going to say that a lot of the same factors that drove the market from $10 to $137 in 2005 to 7. Very similar circumstances this time around. But to put it in perspective, in the last 5 weeks, we've gone from $30 a pound to close to 50 today. So over 60% increase and a 6-year high. It's easy to draw correlations around this price increase to the entry of Sprott and the Physical Uranium Trust that they launched ATM financing, have been tapping the ATM and buying uranium steadily over the last 3 or 4 weeks. But I think we have to be careful that, that's not the catalyst. They're the tipping point. The catalysts have been the things that we've been traveling around Europe together and meeting with investors and giving interviews like this and talking about the rebalancing of the uranium supply and demand fundamentals. We don't have to look very far to see stories and growing acceptance for nuclear energy in a lower carbon world. I think globally, we're coming to the realization that we can't get to a lower carbon economy on wind and solar alone. It can get us maybe 30% of the way, but we've got to, if we really want to make a dent on those carbon emissions and make an impact in the climate change discussion, the world is realizing that we need to embrace nuclear power. And we're seeing that with policymakers, environmentalists, investment community, all warming and in fact embracing nuclear energy. In the United States, we see bipartisan support for nuclear power these days, which is rare in the U.S. that Democrats and Republicans agree on anything, but this is something they're both rallying around. So it's not surprising that nuclear generation around the world has reached pre-Fukushima levels, and that equates directly to uranium demand. We've seen 56 reactors come online in the last 8 years, 51 more under construction, and now we're beginning to see small modular and advanced reactors being proposed in places like Wyoming, with Bill Gates' TerraPower proposing to site a small advanced reactor to replace a retiring coal-fired power plant. So
and I think also Great Britain. In Great Britain also.
Great Britain, the UK, Canada, obviously Russia and China. The small modular reactors are more of the scalable, 50, 100, 200 megawatt reactors, not the 1600 megawatts. So they do have some advantages to be able to load follow and coexist and effectively back up wind and solar in a carbon-free way. So demand is great. And then, as you know, the supply side, we were certainly oversupplied in the uranium market in the years after Fukushima. But since 2016, when global production peaked, we've now seen a 40 to 60 million pound per year gap between production and consumption. So this has had the impact of drawing down inventories and secondary supplies steadily over the past 5 years. So along comes Sprott, which really just kind of cleaned out the rest of the sort of easily available and liquid inventories and secondary supplies, and has provided badly needed price discovery and liquidity in the uranium market. I mean, we were seeing too many months and years where small volumes were trading back and forth between traders, and utilities were quite content at low prices to sit back and do carry trades with traders or just have a very short-term focus. They've been contracting at below normal levels for long-term contracts for the last 8 years. That's going to flip, and it was beginning to change already in recent months. And now utilities will really have to look at uranium more strategically in a production-driven world versus the previous inventory-driven market.
Definitely. And I think also Uranium Energy with Amir Adnani, I call it sister company if you want to have it like this. I mean, Amir was also a real trendsetter, right? I mean, he was one of the first guys starting to buy physical uraniums months ago. And I mean, he did it completely right at around $30. Great.
Right. Well, I mean, in my role as at URC and also my role at UEC, we know how difficult it is to explore, discover, develop, mine uranium, and to do it in a $20 or $30 market. There's really very few, if any, producers in the world that can make money in the kind of prevailing spot prices that we've had in recent years. So it was a pretty easy decision for UEC to go into the market and accumulate quite an inventory at prices in the low $30 per pound. And that's uranium in the drum at a conversion facility that is certainly a very liquid asset on the books of UEC, and it certainly helps market uranium to utilities going forward, where produced pounds can be blended in with purchased pounds that come at a very low cost basis and make UEC more competitive with global utilities going forward. With URC, similar situation. I mean, we realize as a young royalty and streaming company, until we get steady state with steady cash flows coming in from our royalty portfolio, we wanted to provide early investors exposure to the low uranium price at near the bottom of the cycle. So we invested in Yellowcake PLC out of London. We still have a 4 to 5% interest in that company, which gives us exposure to uranium through that holding. But it also gives us ability to buy uranium from Kazakhstan through the Yellowcake options with Kazatomprom. So we exercised that earlier in the year for about 350,000 pounds. And then just this week, we announced that we've added open market purchases of another 300,000 pounds. We're up to about 650,000 pounds total at an average cost basis of around $33. So we've already realized, or we're looking at investment gains already approaching $10 million on those holdings. And again, that provides exposure to our investors in URC that want that diversified pure play exposure in uranium through royalty streams and physical uranium.
Yeah, absolutely. Before we come to your wonderful company, I have one question which is also of interest from my side, because I read this week that the Japanese have also started to say, hey, we want to bring again 3 reactors online. And I think this was maybe one of the turning points, because in the past it was always said, oh, there's so much storage in Japan, that's not a problem, this market is fully supplied. And now all of a sudden they restart 3 power plants. Well, it could be tomorrow 5, 6 or 10.
Yeah, as is the case in any bull market, it seems like all the stories turn to the positive. And certainly we've seen in Japan where a leadership change and the prime minister, the leading candidate, had been fairly anti-nuclear in his statements, but now as he becomes more pragmatic on the verge of running the company and maintaining Japan's manufacturing export economy and providing reliable, affordable electricity, his tune is changing much more positive towards nuclear. So yeah, Japan's been a slow restart, but we've actually built more reactors around the world than we've lost from Japan, and the slow phase out of nuclear in Germany, which I saw in the news clips this morning, Johan, that coal has now topped wind in Germany as the #1 source of electricity.
Yeah, and this is such a green energy creation.
So wind was at its lowest level since 2018. So it really just exemplifies the importance of nuclear power as part of the mix. It's not nuclear or wind and solar. It's the best use of all of those, backing up each other and providing carbon-free or pollution-free energy as well. And we know how big an issue air quality is in India and China and elsewhere, and nuclear certainly fits that narrative. But also in the United States, we had 4 units in Illinois that were under pressure in the power markets that they operate because of the subsidies to wind and solar, really inhibiting their ability to compete. And we just saw the legislature in Illinois pass laws to kind of level the playing field to allow nuclear to be realized for its baseload power and its carbon-free energy. And so 4 units in Exelon's fleet are not only saved from early retirement, but will probably see their licenses extended many years into the future. So all the news seems to be trending positive, and so it's not surprising we're seeing finally the uranium price react to the strong fundamentals.
Absolutely. And I should say also, as I'm an ex-German, the Germans really should restart to use their brain, because if they want to have this e-mobility type amount of cars in Germany, so they should really leave their 3 last nuclear power plants online next year, and they cannot shut them down because there is no baseload for that. That's impossible. Yeah. Anyhow, let's come to your fantastic company. You have now 16 development advanced permitted past producing uranium projects where your portfolio is in. Let's talk a little bit on that. Where do you see, let's say, a focus? Where do you think you can do more? Because you have fantastic world-class royalties in the Athabasca Basin, for example. Yeah, you have this yellow cake investment. You have you have then the global conventional royalties. Yeah, interesting for me also that you are there in Namibia, for example, but also Labrador, Canada. So I think you are extremely well diversified. So where do you see the emphasis, and let's say what is the timeline or the path to get more and more income for your company? Because this is basically what you want to have. You want to have uranium delivered finally. That's why you do a royalty company at no cost.
So we're, we are quite pleased with the royalty portfolio that as a fairly young company, we've only been publicly listed less than 2 years. But to have 2 of the world's largest, richest mines in Saskatchewan at McArthur River and Cigar Lake in our portfolio is huge. But we, very much are a growth platform. This is just the beginning. This is the base that we grow from. With the uranium price increasing, it's exciting because we now look out into the global uranium industry, and we fully assume Kazatomprom will return to sort of full nameplate capacity, and Cameco will restart their mines in Saskatchewan. But even with that supply, we need probably 8, 9, 10 new significant mines around the world. And this investment, could total $2, $3, $4 billion to build this next generation of mines. So as a royalty and streaming company, we're a source of alternative finance, an alternative to debt or equity to complete these operations and bring them into production. So my number one focus right now is to be reaching out to these various counterparties in every producing region of the world and offer to come alongside them as part of their capital structure to advance their business models. So any good royalty company is going to have near-term, mid-term, and longer-dated royalties. We have some great longer-term royalties like Rough Rider in Saskatchewan, which is a Rio Tinto project. I mean, it's not going to produce in cash flow in the near term, but as the current generation of mines in the Athabasca phase out, Rough Rider suddenly crystallizes and comes into focus. So we have those, I would say, tucked away for future value. We have, a focus on mid-tier royalties. I mean, there's a lot of projects. And again, back in the Athabasca Basin, those are very attractive targets to us, where producers like NextGen, Fission, and Denison, have projects that are world-class and will advance quite significantly in this bull market, but it still may be a couple years before they get through the permitting, licensing, and construction, but are very attractive targets for us. So it really brings us to near-term cash flowing producing royalties, and we do have that with Langer Heinrich in the portfolio. We have Cigar and McArthur, but we're out there looking at what's this first tier of mines that can come on in this bull market quite quickly. And it really is limited to restarts of existing operations, which sometimes also require capital, like Langer Heinrich. It's approximately $70 million to restart the mine in a reconfigured mine and mill process that has sought to lower their production costs. Boss Resources in Australia is another one which is reconfiguring that operation for restart here in the near term. So we're looking at those kind of opportunities. We really like US ISR. That should not come as a surprise. Why? Because ISR mining is lower capital cost, lower operating cost, and if it's fully permitted and licensed, the lag time to get into production can be months and not years. And also, I think ISR mining has a lot of advantages in terms of environmental friendliness of that mining technology, and should be embraced by environmental groups and certainly landowners and stakeholders in those areas. And so,
yeah. With ISR, I remember a photo I saw when UEC was in production, and you were producing, or UEC was producing uranium, and the cows were on top, and eating the grass.
Yeah, it's
amazing.
We love conventional mining, open pit and underground mining. But that requires excavation, drilling, blasting, waste rock, mill tailings, all the things that go along with normal conventional mining. ISR is quite unique in that it just takes the natural processes that deposited the uranium there in the first place and reverses them. So we're basically oxidizing uranium out of the sandstone using sodium bicarbonate, which is a very benign solution like Perrier water, effectively, to oxygenate the uranium and get it into solution and pump it to the surface. It looks more like a oil and gas collector field than it does a mine, but it's also very cost effective and a way for, in the US, those mines to compete with the bigger players in say, Australia, Canada, or Kazakhstan.
Absolutely. So what do you have to do, let's say, in the near-term future? Because you just said that those projects are really large. They require $1 to maybe $3 billion. So what is your firepower? From where do you think you get more money? Because I can imagine that now a lot of companies are calling you, let's say, aside of utilities, whatever, but that really a lot of companies are coming to you now and say, hey, listen, we have this fantastic project, but we need financing, we need this and that, like you said, 70 million Langer Heinrich. So how do you want to do that? Yeah. And I know royalty business inside out in the gold business, of course. Yeah. And if I look, for example, at Osisko Gold Royalties, they have like 500-600 million credit facilities and stuff like this to use. So how do you want to do that? Do you have a big bank consortium now on your side, or you want to do that, for example? Or what is the plan for that?
Yeah, so we're quite fortunate today, sitting with over 70 million in cash, marketable securities, and physical uranium, and so we're fully able to go after uranium purchases with cash we have on hand, or even acquisition of smaller royalties. In these early stages, until we, eventually the goal of a royalty company is to finance your future acquisitions from existing cash flows. But in the early stages, we will use our low cost of money and our shares trading at a premium to go out and raise capital to make accretive acquisitions. And unlike a mining company that may raise money to just kind of maintain permits and workforce and kind of G&A and overhead, our model requires very little G&A and overhead. I think in the past year, we maintained this company for roughly $1 million a year to maintain this structure, because the employees are only 4 or 5 employees. We don't have to run the mines and maintain those workforces that the miners do. So everything that we raise goes into accretive acquisitions, and we're quite disciplined in these acquisitions. We're not going to go out and acquire royalties and streams and by overpaying just to be able to put points on the scoreboard. We use our experience that we've had in decades of mining, permitting, developing in the U.S., Canada, and elsewhere to really go out into that universe and come alongside the best projects and provide that financing. So, the model is quite attractive where, as I said, we have a very low cost of money. We can go out and provide and, make that low cost of money available to producers to advance their projects, and we grow our portfolio. So it's a growth story, and every acquisition we make kind of re-rates the company and through these accretive acquisitions.
Mm-hmm. Fantastic. Let's have shortly a look on your capital structure. And you have 83.1 million shares out, almost 24 million warrants, a little bit of options. So fully diluted 108 million shares. I think that's a great number for, let's call it a producing company, because that's what you are finally are. Also, your key shareholders. This looks like the who is who to me, honestly, in the uranium business. That's crazy. I mean, our good friend Tobias, Commodity Capital, Rick Rule, which we know very well, of course. Casey Arfan, I think, is Marin Katusa, right?
Yes.
Yeah, exactly. And Altius, Mega Uranium, UEC, of course. So
these big shareholders, whether they are kind of giants of mine finance individually or through their funds, or they're the corporate shareholders like UEC, our largest shareholder, we really looked out at the success that the royalty and streaming model had experienced in base and precious metals. Franco-Nevada, Wheaton, Precious, Sandstorm, Royal Gold, these companies that had really emerged in the last 10 to 15 years into a $50 billion industry. And we're just amazed that no one had done it in uranium. And I think there's reasons for that. We were going through a very long, deep bear market, and no one was thinking about developing the next generations of mines or financing royalties. But here, as we sit on the cusp of this next big bull market, we emerged as the only royalty and streaming company in the uranium space, and that's a pretty advantageous position to be in. We are uranium people. We get the risks and reward, and we understand how difficult it is in the uranium business, but we also know the great rewards with successful operations and development. So we're the right people to come alongside these companies and provide that royalty and streaming support. And for investors that might not be as knowledgeable in mining engineering or geology, and it's maybe a challenge for them to break down individual companies and choose which ones to invest in, we do that legwork for you through our due diligence. Our chief technical officer was with Cameco Corporation for over 20 years in their global exploration, and performs our due diligence, which is so important that we do our homework on these projects. So we do that for the investors, and they get that diversified exposure.
Fantastic. So you're closer to say you're like a fund.
Yes, well, it is. There's the ETFs, there's the physical commodities, we're something in between.
Yeah, exactly.
Definitely.
Super. Last question. When do we see uranium at $100?
It's I always have to be conservative as a mine operator and developer. You don't do you do a disservice to try to be overly optimistic in terms of uranium prices. You need to plan for a lower price environment and structure your operations to come in underneath that. But now, as we sit at $50, probably being printed later today, and the fact that Sprott, has now raised their ATM from 300 million to 1.3 billion, that's a lot of uranium, a lot of shares that they'll be issuing. They're trading at a significant premium to their NAV, so they'll continue to sell shares and continue to buy uranium off the open market. So, and we have all this happening before the utilities, the ones that actually use the uranium, come in and enter the market.
They need it, really.
Yeah, so we've seen a very large U.S. utility come out with a public RFQ this week. We've seen the Korean utility come out for close to 8 to 10 million pounds in the long-term request for proposals this week. So that wave now is beginning, and so there's nothing to say it can't go to 100 by Christmas.
Thank you.
Theoretically, should uranium be $60 a pound? Probably. You could probably, if you had to do a theoretical economic market clearing price for production and consumption and everything else. But uranium has never been an efficient market. It's highly illiquid, And that's very damaging when the market's oversupplied. It goes down lower and stays down longer because of those inefficiencies. But when it swings to undersupply, those inefficiencies are the uranium investor's best friend, because we can't bring on mines very quickly. Even with strong $60 uranium price signals, mines just can't flick a switch and be producing. Even the big mines like Cameco and Kazatomprom, I think Kazatomprom won't ramp back up to their nominal capacity probably until 2023. That seems to be the indication. And Cameco with McArthur River, this is a big industrial operation that needs to be fired back up, and that doesn't happen quickly. So even with uranium prices running, you don't see the normal supply side responses that you might see in copper, gold, and other official commodities.
Absolutely. Yeah, mining is it's not a business where you push a button and it works.
Yeah.
Definitely not. Super. Scott, thank you very much. 25 or 26 minutes, even great talking to you. Thank you. It's really fantastic. I think we both should have a very good drink tonight. Probably we have to do some pros via this medium here, because I think we still a longer time that we cannot see us, but hopefully next year then at PDAC. And then we need to get definitely a nice bottle of red wine.
Yeah. Well,
because,
listen, Johan, I'm just happy for uranium investors who've had to be very patient. We've been talking about all the positive fundamentals for so long, and uranium investors have believed and subscribed to this narrative. And it's nice to see it finally translating into higher uranium prices and the equities all being lifted in the process. So
exactly.
It's good times.
Higher share prices. Yeah,
absolutely.
Exactly. Super. Perfect. Scott, all the best to you. Thank you very much. Please keep us posted. I have a very good feeling that we talk quite soon, because my feeling is that uranium moves now really higher and higher and higher, because this is the outbreak we waited for.
Absolutely. Great. Thank you, Johan.
Thank you very much, Scott. All the best. Yeah, ladies and gentlemen, that was Scott Melby, the CEO of Uranium Royalty. And you heard it. We have the outbreak. It is there. Uranium is almost approaching $50 today, and it was 49 already. And it looks like, as Scott said, maybe the 50 are printed today. If not today, maybe then tomorrow. But Uranium Royalty is definitely a fantastic vehicle to participate in those markets. And to be honest, this is not a short-term trend. This is a longer-term bull market. It reminds us really on 2005 until 2007, but this time things are really different, because we have e-mobility, we have hybrids, and we have millions of cars which need to be loaded every day, and they are becoming more and more and more. And so for that side, we need stable baseload. Without nuclear energy, it's absolutely impossible to reduce GHG emissions, and Uranium Royalty is there. And don't forget, they do the due diligence, so you get a fantastic broad-based portfolio with this fantastic company led by extreme well-known professionals. Thank you very much for watching us. Check out the company. Bye-bye from Austria today.